Hello and welcome to Morning Trade with Moneycontrol. I'm Karunya Rao and I'm here to help you navigate the trading day with actionable strategies, sectoral trends and most importantly your queries during the show. So please keep your comments coming on our live feed. Before we kickstart, let's see what the global handover looks like. The S&P 500 and the Nasdaq post their best week since November as Wall Street rallies for a second consecutive week. Stocks in the Asia-Pacific trade largely higher as well, while the SGX Nifty is indicating to a mildly positive start to the Indian market. HDFC Bank's Q3 numbers will be in focus. NII growth was best in 7 years. Asset quality was stable. Is it the time to buy? We discuss on the show. Other earnings in limelight will be DMart, Wipro and JustDial. We also discuss the technicals of REC and Dr. Reddy's. Okay, let's take it across to Neha Dave from from Moneycontrol Pro to discuss HDFC Bank's Q3 numbers. Hi Neha, good morning. The performance has been quite impressive, but will the stock price react? Will it be reflected in the number there in the stocks movement today?
Thanks, Karunya, for having me. HDFC Bank reported its best ever quarterly profit in Q3. And this was driven by a solid loan growth. Deposit growth also was very healthy, despite the banking system deposit growth is still muted. So overall, it was a very great set of numbers. The bank had reported the best-in-class return on asset of around 2.2%. Now, despite reporting consistent earnings and growing the book at an accelerated pace, gaining market share, the stock performance hasn't been so impressive so far, and this is primarily due to the overhang of impending merger. Now, the stock may not react. Or the valuation may not re-rate significantly from here onwards due to the merger-related uncertainty. The street is anticipating or has certain concerns relating to rise in the regulatory cost post the merger. The management, however, has clarified that merger is likely to be earnings accretive from the first year itself. The earnings is not something that will immediately lead to the re-rating of the stock, though the valuation of the bank is very, very attractive currently. The stock is trading at around 2.6 times the estimated core book value for FY24 of the merged entity. Now, this valuation is at a discount or a significant discount to its historical long-term valuation. But the re-rating won't happen immediately on the basis of a strong earnings. The street would like to see the progress on merger.
Okay. So what, according to you, was the biggest highlight here? Of course, merger has been a big overhang on the stock. And in fact, largely, if we see last few months, despite most banks running up, HDFC has stayed rather quiet, rather subdued. What exactly is, hurting the sentiment there? Of course, you said merger is a big event that everybody is watching out for. But other than that, is everything else all right on the reports front, on the balance sheet front? Everything okay?
Yeah. So apart from merger, there is one area which the street has been concerned about, and that is margins. The margins for HDFC Bank in the recent quarter was around 4.1%, which still is very good, but it is at a lower end of its historical margins that the bank used to report. It used to have margins as high as 4.4 to 4.5%. Now, there has been a steady decline over the last couple of years in the margin, and this has been a concern area for the street. However, the bank management has clarified that there are enough levers to improve the margins going forward. That again may not happen immediately, but it can. The margins can improve gradually over the next few quarters. One of the reasons for margins decline was the bank's focus on corporate lending and reducing its high-yielding retail loan portfolio. But if we look at the latest numbers, that is Q3 numbers, the retail lending has grown at a faster pace. So as management has rightly indicated that once the proportion of retail loan book again rises, the margins will improve over a period of time. And also because in the rising interest rate scenario, the bank will get some benefit because deposit will get repriced with a lag effect. So both these factors put together should support margins going forward. but it would be very gradual. So this is something, an area which the street would watch very closely for HDFC Bank.
Okay. But if I look at the net interest margin for this time around, it's been the highest in 10 quarters. Do you think it was a one-off, or there could be some more sluggishness before it meaningfully recovers?
Yeah, so as I said, before it meaningfully recovers, the proportion of retail assets has to rise to the pre-COVID level, which is still below the pre-COVID level currently. And also, the bank will get some benefit of rising interest rate scenario. So margins is something still the bank needs, or there is the scope of improvement, as management indicated, and that would help the bank drive earnings going forward. If you look at what was the significant driver of earnings in Q3, it was a very strong loan growth and the significantly low credit cost or the provisions. The credit cost for the bank was at multi-quarter low, and that has driven the earnings. But going forward, the margins could be one of the levers for the profit growth.
Okay, interesting to know that. But Neha, right now, as things are for HDFC Bank, do you think it's a prudent idea to invest at these levels? Or do you think there are better private sector lenders or even public sector lenders at the current valuations which offer more potential for wealth creation?
So yes, so if you look at the bank's performance, and as I mentioned, the bank is gaining market share at an accelerated pace. The largest private sector lender, the earnings are very good, and the valuation also is very attractive. But as I said, the merger overhang will keep the stock range bound till there is certain progress or the announcement from the regulatory side also. But this gives an opportunity or the window for the investors to accumulate this long-term compounder. So at this price, it's a good bet for long-term investors.
Okay, great. Thank you so much, Neha, for joining us this morning and talking to us about HDFC Bank's numbers. With that, we'll move on from fundamentals to talking technicals. Rajesh Palvia joins us from Axis Securities. Morning, Rajesh. What are the cues telling you for the day? And if you could also tell us how Nifty Bank and HDFC are placed, given the numbers have been quite resilient.
Good morning, Karan. Yeah, so still market is in range bound. If we look at the overall setup for the market is struggling to cross its resistance area of 18,050, 18,100. On the downside, again and again, we are seeing that, market is getting support from 17,800. So we have to play in the both side in terms of indices. At least whenever market moves near to 18,050 level, one can go short. And whenever it comes near to 17,850, it's a buying opportunity. So it's a range bound setup for Nifty. At least looking at the derivative setup also, a lot of put writing activity at 17,700, 17,800 strikes. So which is immediate support area for Nifty. And on the other hand, 18,000, 18,100 is having major call writing activity. So it's going to be very tight range for the market. But looking at the stock specific action, yes, we are going to have stock specific action in the market within this range also. Some of the stocks, some of the sector has shown good buying interest in last couple of trading sessions. So we believe stock specific, one should focus on the stock instead of playing in the index. Let the index to give either side breakout or breakdown, then it will decide a major direction from here onward. So breakout above 18,100 will take Nifty towards 18,300, even 18,400 on the higher side, and breakdown below 17,700 can take Nifty lower towards 17,500 or 400 zone. On the weekly chart, both the indices have formed a rosy candlestick formation, which is very important as of now to monitor. So previous week, high and low is very important. So either direction can give you a big move in the market. But stock specific, yes, we are bullish on metal space, we are bullish on PSU banks, we are bullish on FMCG space, and these all space are looking attractive. So one can find out the opportunity from capital goods also. So these stocks are looking attractive.
Okay.
So,
okay. How about banking? If you could give us some color on Nifty Bank and HDFC specifically.
So Nifty Bank has recovered in the last week, and looking at the overall setup for Bank Nifty also, it's in broad range, 41,500 to 43,500. It's a broad range for Bank Nifty. But if you look at the very near-term setup for trading perspective, the immediate resistance for Bank Nifty is at around 42,600, 700 zone for Bank Nifty spot. If at all Bank Nifty manages to cross those levels, then possibly it may scale up towards 43,300 to 43,500, which is the next major hurdle for the Bank Nifty. On the lower hand, 41,700, 41,500 is key support area as of now for near-term setup. If he breaks below those levels, then this correction will continue further towards 41,000 level also. Even if from the banking space, we have witnessed some buying interest in the PSU bank, especially in the last trading session. Stocks like Bank of Baroda, Canara Bank, even SBI, these three stocks have attracted the buying, and again we can see furthermore upside momentum. If you analyze the HDFC Bank setup, now stock is trading almost near to its 50-day moving average. In previous trading session, there was a doji candlestick formation, that is indecisiveness. So previous day high, if a stock manages to cross above 1610 level, then it may scale up further higher towards 1640, 1650. And on the breakdown of 1585, it may correct further towards 1540 also. So opening is very important for HDFC Bank. We need to watch 1610 on the higher side and 1585 on the lower side. Either side breakout, breakdown will decide the direction from current level. As the trend is still slightly weak on the near-term setup, but stock is still in a broader consolidation. So breakout and breakdown is very important for today's session. So one needs to watch these two levels after the opening.
Okay, thanks for that heads up. In fact, we're getting some questions on other private sector lenders as well. Could you address Karnataka Bank as well? Saurabh is asking if it's the right time to enter. And do you, think it's a better idea to perhaps invest in smaller private lenders or alternatively PSU banks, which you're upbeat on? If not in HDFC or if not these larger banks.
So PSU private bank both have moved in a tandem, especially in last couple of trading session. But overall, if you look at the setup, yes, private banks are still in a better position. If we talk about the KTK Bank, Karnataka Bank, stock is after giving a breakout on the monthly chart, stock is consolidating since last couple of weeks. Still, stock is in bullish zone for short to medium term perspective till stock is holding above 142 level, which is very important for the stock. If it continues to hold above 142 level, then Karnataka Bank can manage to give breakout on the higher side towards 155, which is the immediate resistance area. If at all stock crosses above 155, then it may continue its upward momentum, and possibly we can see target of 165 to 170 on the higher side. So if you are holding Karnataka Bank, keep your stop loss now 42 and hold your position. From private banking space, again, we like Federal Bank also from small banks. Like Federal Bank is also holding its breakout level and consolidating at the higher band of this breakout. Looking at the Federal Bank, we believe that once the stock crosses above 144, 145 zone, then possibly stock can scale up further higher towards 155 to 160 zone. So again, Federal Bank is looking attractive. One can keep a stop loss of 132 to hold their long position in Federal Bank also.
Okay. In fact, Federal Bank's earnings will also be coming out later today. So all eyes on that as well. Let's talk about some more earnings candidates, Rajesh. Avenue Supermarts delivered its numbers during the weekend. It's been a rather, unimpressive set. Q3 profit rose by a meager 6.5%, largely impacted by margin contraction. In fact, their margins have fallen 110 basis points because of higher input cost. The margin has come in at 8.3%. Revenue, however, was up 25.5% year on year. Now, DMart has been extremely slow and sluggish. If we look at 6 months, 1 month, or the last couple of weeks, it hasn't done much for its investors. What is your view about the way forward, the likely way forward for DMart from here on?
So after making a all-time high of around 5,900, the stock is continuously in downtrend since last 4-5 months. We are seeing that continuous supply pressure is there in the stock. Stock is now trading below all its long-term moving averages also, and whatever recovery we are seeing in the stock is not that much great in terms of price action. Looking at the near-term setup, stock is now trading near to its multiple support area, which is very critical support area for the stock, 3850. Though the setup is weak, so we believe that if stock breaks below 3850 level in today's session, then possibly stock will continue its downward momentum, and it may go down further towards 3750, 3700 level also in the continuation of this downtrend. If at all stock manages to cross above 3960, 3980 level, then only some a buying action or fresh buying action we can expect in this stock. But as of now, the structure is weak. Below 3850, it may go down further towards 3700 also.
Okay. All right. Keeping it with earnings candidates, Wipro delivered its numbers Friday evening. Again, good set of numbers here, especially the operating performance, which came in much better than analyst expectations. Profit jumped 15% QOQ. Revenue is up 3% QOQ. And this is when Q3 is a seasonally weak quarter. Talk to us about Wipro, because even this one, just, very similar to DMart, has been very, very flattish in the last few months.
So Wipro is still in downtrend, and looking at the overall setup, 380, 376 is the critical support area for Wipro on the lower side. Whatever pullback we have seen in last couple of weeks or in couple of months, again and again, stock is getting supply from 410, 415 zone. So that is very challenging level for the Wipro on the higher side until stock not managed to cross above 415 level. Again, we are going to witness a supply on the higher side. On the breakdown of 375, it may continue its downtrend, and possibly it can go down towards 350, 345 zone also. So overall setup is weak. If you are buying for trading perspective, you should keep strict stop loss of 376. But there are some other opportunities also in the within the same pack. So our advice is to avoid at this current juncture. Wait for either side breakout or breakdown to take any trading position. If you want to go short, wait for 376 breakdown, or if you want to go on the long side, wait for breakout above 410, 415 only. Then think for any kind of long trade in the Wipro.
All right. Okay. What about JustDial again? Earnings candidate, profit has been very solid, 288% jump year on year. Operating performance was strong. Top line growth has come in healthy, but the stock again, in line with largely all the IT sector peers, even this one has been muted.
So stock is in very tight range, still struggling to cross its 50-day, 100-day moving average. Since last 4-5 months, stock is consolidating in very tight range, like 530 is a lower band, and on the higher side 630. So until stock not crosses above 630, it is going to remain in the consolidation only. So wait for 630, 35 zone to give breakout on the higher side, because it's again coincide with it's a falling trend line on the monthly chart. So if it manages to cross above 635, then we can see some price action further higher towards 700, 730 zone. But as of now, looking at the setup, we believe that some more consolidation we can see in the near term to short term basis. So by around 530 zone, that is the major support area for the stock. So dips can be used as a buying opportunity in this stock.
Okay, moving on to some more stocks and news then. REC has signed an MOU with MP Power Management Corporation to extend financial assistance for upcoming power projects of more than 15,000 crore rupees. It has also signed a non-binding MOU with the UP government for, again, extending financial assistance for more than 1 lakh crore worth of power generation, distribution, transmission and other related activities. Now, REC has done pretty well last 1 month, adding about 11-12% on the upside. Still continues to be close to its 52-week high levels. So talk to us about what to expect next from REC.
Yeah, definitely. REC, PFC both have done well in the last couple of trading session. If we talk about REC, almost stock is on a verge of giving breakout of its multiple resistance zone on the weekly chart. In this recovery process, stock is now forming its rounding bottom formation on the weekly chart. And looking at the setup, if stock manages to cross above 129, 130 zone, then possibly stock can give another round of rally towards 145 to 150 zone on the higher side. So if you are already holding REC, you can remain invested and keep now a stop loss at around 115. Even the fresh buying can be done at the current level also with stop loss of 115. On a breakout of 130, we are expecting target of 145 to 150.
In fact, we do have a query coming in from Muthu Kumar on Power Finance Corporation as well, PFC. So if you could shed some light on the technicals of that too.
So almost similar kind of a chart structure for PFC also, but one notch better chart structure for PFC. Stock is already already given the breakout of rounding bottom formation on weekly chart. And looking at the PFC setup, one should remain invested with stop loss of 146. Upside target we are seeing around 165 to 170.
Okay, all right. Moving on to Dr. Reddy's, they've acquired trademark rights of breast cancer drug called Primi from Pfizer Products India, and with these rights that they've acquired from the company, DRL will be using this drug in the Indian market. How's the chart of DRL looking? Should one look at investing in pharma stocks at the current juncture, or will it still largely be an avoid?
So still most of the pharma stocks are consolidating and not giving any kind of breakout on the near term short term chart. The same structure is for Dr. Reddy also. Stock is still struggling to cross its 100-day moving average. Multiple attempt has failed for the stock. And overall, if we analyze the setup, stock is still in the downtrend. So for Dr. Reddy, especially until the stock not crosses above 4400 level on the weekly closing basis, it will remain under pressure. And on the downside, 4250, 4220 is the immediate support area. So we believe, some more consolidation we can see in range of 4200 to 4400 for Dr. Reddy. Either side, the breakdown will decide the major move in the stock going forward. So if you wish to buy a stock, just wait for some corrective action towards 4250. Then it's an opportunity to buy with stop loss of 4200. Because it's a very range-bound stock since last couple of weeks. So we believe this behavior is going to continue furthermore. So we are waiting for a breakout either side to have a major move in the Dr. Reddy especially.
Okay, all right. In fact, even Lupin has gotten some news coming in. They've received a Form 483 for their New Jersey unit. How's Lupin's chart looking? This could also perhaps be in focus today.
So Lupin is continuously showing some buying interest, and since last 4-5 months, we are seeing that stock is inching up higher. And if we analyze the weekly as well as the daily setup, the stock is moving in up-sloping channel. So that gives indication that slow, steady, some buying interest is happening in the stock, and the stock is moving higher. Stock is now trading above 50 to 100-day moving average, which is also adding up some strength in the stock. So if you are already holding Lupin, you can hold the position with stop loss of 730. On the higher side, the kind of chart structure which we are seeing is suggesting us that stock can move higher towards 780, 790 zone in the continuation of this uptrend. So keep stop loss of 730 for upside target of 780, 790.
Okay. All right, let's address some more viewer questions and queries. Varun is writing to us and he wants your advice on Varun Beverages chart. This one has given up about 200 odd rupees in the last 2 weeks. Time to buy, or do you foresee some more pain on the counter?
So long-term setup for Varun Beverages is bullish, though some corrective action is coming in the stock since last couple of weeks. Even on the monthly chart also, stock has given a breakdown of its previous month low also. So we expect, looking at the near-term chart, yes, some correction we can see in the stock towards 1050, which is the next major support area for the stock. So until stock not manages to cross about 1200, it may remain under pressure, and 1050 is the next level where stock can come. So again, one should review around 1050 level whether the supply pressure get exhausted around those level or not. So as of now, we are seeing some more pressure is likely to continue in the stock.
Okay. Narayan Venkatesh is asking about CAMS, Computer Age Management Systems. How is the chart looking for this one? Again, slow and very, very sluggish move over last few months.
Yeah, so after a corrective move, now stock is getting some buying interest at the lower level. Since last couple of weeks, some buying interest has been seen in the stock. Even on the daily chart, the stock managed to give breakout of its falling trend line. Now stock is sustaining above its 20-day, 50-day moving average. Looking at the near-term setup, we expect some recovery we can see in the continuation of this uptrend which we are seeing in last couple of trading session, and we are expecting 2350, 2400 could be the possible target in the near term. If you are already holding, or if you want to buy at the current level also, you can buy with stop loss of 2220, upside target 2350 to 2400.
Okay, all right. Rishi Ranjan is asking us about Bajaj Finserv. He has 30 shares and wants to know what lies ahead for investors of Bajaj Finserv.
So both Bajaj twins are underperforming, and both the stock have given a breakdown of its near-term, short-term setup. And looking at the Bajaj Fin, structure is weak now. Stock is slipped below its 200-day moving average also. Looking at the monthly setup, again, it's a fifth month where we are seeing continuous supply pressure in the stock. Now, if stock continues to trade below 1420, 1430 zone, then possibly it may correct further towards 1280 zone. So another 100 rupees down tick we can see in the Bajaj Finserv. So overall setup is weak. 1430, 1440 is the key resistance area as of now. Until the stock trades below this level, possibly furthermore round of corrective action we can see in the Bajaj Finserv.
Okay, all right. Chirag is asking us about which stock to buy between PVR and Inox Leisure. What is your pick, Rajesh?
So ideally both stocks are now same. The both stocks will move in tandem only after this merger announcement. And looking at the PVR and Inox, the stock structure is almost similar on the monthly setup. If you wish to go on the derivative side, the PVR is the available in the derivative space. If you only want to buy in cash segment, you can buy Inox also. So if we define the Inox setup, yes, stock is having good support area at around 480. On the breakout of 550, stock can move up further higher towards 620, 630. If we define the PVR structure, the support area for PVR is at around 1665. On the breakout of 1825, stock can move further higher towards 1940.
Okay, all right. Next query then that's coming in. It's from Prahlad Singh. He wants to ask if he should stay invested in Adani Wilmar or exit. Last couple of weeks, again, around 40-45 rupees eroded on the stock price. Should one stay put?
Yeah, some consolidation or some corrective action is happening in the Adani Wilmar. Now stock is trading below all its important moving averages. So some pressure is still there in the stock. If we analyze the near-term setup, if stock crosses above 600 zone, then some buying interest we can see in the stock towards 625 to 630 zone. On the breakdown of 560, it may correct further towards 545, even 530 zone. So overall, structure is still weak for Adani Wilmar as of now. If you are holding a long position, then keep your stop loss at around 565, 55 zone. If it's break those level, then possibly some more corrective action we can see towards 540, 530 zone also. So the strength will come only above 625. Till stock is trading below 625 level, we are going to witness supply in any kind of pullback action in the near term.
All right. Okay. And how's the structure looking for Asahi India Glass? So we have a query coming in from Alex. This one also has given up about 10% last 1 month. Will the downtick most likely continue?
So since last 3-4 months, yes, some supply pressure is coming in the stock. Now stock is trading near to its important support area of 500. If it breaks below 500 level, yes, so then it may continue its down move towards 460, which is the next major support area for the stock in this fall. So setup is weak. If it continues to trade below 540, 550 zone, then some more supply we can expect in the stock in coming trading session. And on the breakdown of 500, it may continue its down move towards 460 also.
Okay, how about your own preferred picks in the market? Which stocks are you eyeing right now?
So first stock is from automobile space, that is Mahindra and Mahindra. Stock is almost trading near to its all-time high trajectory, and looking at the weekly setup, we expect that further more upside we can expect in the Mahindra and Mahindra, and upside target we are projecting towards 1380, 1390 zone. One can buy and accumulate the stock with stop loss of 1290. Another stock is from PSU banking space, that is Canara Bank. Overall setup for the Canara Bank is bullish, and looking at the overall structure, we believe that this strength is going to continue in Canara Bank, and on the higher side, this stock can move further higher towards 345, 350 zone. One can buy and accumulate in the range of 324 to 316. Keep stop loss of 308 for Canara Bank. Third stock is from metal space, that is Tata Steel. Overall, we have seen strong recovery in whole metal space. And looking at the Tata Steel structure, now stock is managed to give breakout of its previous swing high. Now stock is sustaining above 118 level. So if it continues to hold above 118, then possibly stock can move further higher towards 135, 140 zone. So one can buy and accumulate Tata Steel also with stop loss of 112.
All right, so two heavyweights, M&M and Tata Steel, and one stock from the mid-cap universe, Canara Bank, on Rajesh's radar. Thank you so much once again, Rajesh, for joining us this morning. Guys, there are a lot of queries and comments trickling in. Unfortunately, that's all the time we have. But I suggest you tune in at 8:30 every day. Queue up your queries so that we can have them addressed by our expert on the show. For now, it's a wrap. Thank you for watching.